All right, welcome back. Before we get into today's topic, I want to tell you a story. And I want you to be honest with yourself about whether this sounds familiar. You discovered trading. Maybe it was a YouTube video, maybe an Instagram post. Some guy with a laptop on a beach, charts on the screen, living the dream. And you think, wait, people actually make money doing this from home? So you get curious, you start watching videos, you buy a course. The course teaches you smart money concepts, or fair value gaps, or supply and demand, something with a cool name that looks very convincing on a chart. The instructor shows you beautiful setups, clean entries, perfect exits. You study, you practice on demo. The strategy starts to click, at least you think it does. So you fund a live account. And this is where it falls apart. First account, gone. Maybe slowly, maybe fast, but it's gone. You tell yourself you just need more practice. You fund again. Second account, gone again. Now you're frustrated. Maybe the strategy isn't right. So you buy another course. New indicator, new confluence. More rules on top of more rules. Third account, same result. Fund, lose, study, fund again, lose again. You start chasing losses, risking more to recover faster, and it gets worse. This is what traders call the loop of doom, and it is the most common trading experience on the planet. Now here's the statistic nobody says loudly enough. 90% of retail traders lose money. Not a rumor. Documented across brokers, markets, and countries. 90%. Now think about this. You bought a course that hundreds of thousands of other people also bought. You're looking at the same setups, the same signals, the same entry criteria as everyone else who took that course. If 90% are losing, and most beginners are all learning the same popular strategies, then those popular strategies are most likely sitting firmly inside the 90%. Now, I want to be fair here. I'm not saying discretionary trading doesn't work at all. Some traders are genuinely profitable using it. There are people who have spent years developing real consistency, but they are the exception, not the rule. And here's the deeper reason why most people never get there. It's not just execution. It's something more structural. Discretionary trading is, by nature, perceptive. Two people can take the exact same course, look at the exact same chart, and see completely different things. One sees a valid fair value gap. The other sees a liquidity sweep. One enters. The other waits. Both think they're following the strategy correctly. That is the core problem. Discretionary strategies live in the eye of the beholder. Every trader who learns one creates their own private version of it, shaped by their biases, their recent losses, their mood, their interpretation of what the instructor meant. You are not trading the strategy, you are trading your version of it, and your version changes depending on the day. And here's something I know from building automated systems that most discretionary traders are completely unaware of. Small changes produce dramatically different results. Entry 1 candle earlier or later, a stop loss 5 pips wider or tighter, removing trades during one session. These micro adjustments, things that feel insignificant, can be the difference between a strategy that's profitable over 3 years and one that blows up. In algo trading, we measure the impact of every one of these changes against years of data. A discretionary trader makes these micro decisions every single trade, without realizing it, without measuring it, with no idea what the cumulative effect is. That is not a skill gap. That is a structural problem, and no amount of screen time fixes it. So let's define what we're actually talking about. Discretionary trading, every decision is made by you in real time based on your judgment. Entry, exit, stop loss, position size, all filtered through your brain and your current emotional state. On a good day, it can look clean, but trading doesn't just happen on good days. It happens when you've just taken 3 losses in a row, when you're tired, when you're trying to recover before end of month, when fear and greed are both screaming at you at the same time. In those moments, which come constantly, your judgment becomes your biggest enemy. Let me get specific on the real problems. Emotion. A loss doesn't just cost you money, it shifts your psychology. You become hesitant on the next trade, or reckless depending on your personality. Either way, your next decision is colored by what just happened. That's not trading, that's reacting. Inconsistency. Can you execute the same strategy identically every single day? Most traders can't. They skip valid trades. They take setups that don't qualify. They move stop losses. Every trade is slightly different, and those differences compound over time in ways you can't see or measure. The illusion of adaptability. Traders love to say, "I can read the market." But let's be honest, nobody knows what the market is going to do. Not you, not the most experienced hedge fund manager alive. The market is the most complex system human beings have ever tried to predict. What feels like reading the market is usually pattern recognition from recent memory, one of the most unreliable forms of analysis there is. You're not adapting, you're reacting, and convincing yourself you saw it coming. No real backtesting. This is the most damaging one. To manually backtest years of data, chart by chart, across multiple time frames, would take months. And even if you tried, your bias would contaminate the results because you can already see what price did after the setup formed. Multi-time frame strategies are almost impossible to backtest manually. So what do most discretionary traders do? They skip it entirely. They go live with zero statistical proof their strategy has an edge. That is gambling with extra steps. Time. You are the system. If you're not there, nothing happens. You can't scale it. You can't step away. It requires you showing up every day at the right time in the right mental state. That is not sustainable. Automated trading is when you convert your strategy into explicit rules and a computer executes them on your behalf. When conditions are met, the trade goes in, gets managed, and exits, exactly as programmed. In Forex, these are called expert advisors. In other markets, trading bots, algorithmic strategies. Same concept. The machine doesn't get scared, it doesn't get greedy. It doesn't wonder if the trade feels right. It checks the rules and executes. That is a fundamentally different relationship with the market. Here's what that actually gives you. Consistency. Your rules are followed 100% of the time, not 80% on a good week. Every time. Over months and years, that consistency is where the real edge compounds. Emotion removed. No revenge trading. No freezing after a loss. No overtrading after a win. The psychological warfare that destroys most traders simply doesn't exist. It runs while you sleep. Forex is 24 hours a day, 5 days a week. You're not. Your system is. London, New York, Asian sessions, all covered. That's compounding returns you physically cannot achieve manually. Real backtesting. You can run your strategy against 10 years of data in hours, measure the win rate, the drawdown, the profit factor, before risking a single dollar. A discretionary trader can only go forward and find out the hard way. Scalability. The system doesn't need more of your time as it grows. Run multiple strategies on multiple pairs simultaneously. Discretionary traders hit a ceiling fast because they are the ceiling. Automation removes it. And before you say, "This sounds great, but I'm not a programmer," you don't need to be. You don't need a computer science degree. With AI tools available today, the coding side is more accessible than it has ever been. What you need is a basic understanding of what your code is doing, not how to write it from scratch, just enough to read it and know when something is wrong. That practical side, building these systems without being a developer, is exactly what we're covering in future videos. Subscribe now so you don't miss it. Now let me be honest about automation too, because it's not perfect. If your strategy has no edge, automating it just means you lose money faster. A bad strategy executed perfectly is still a bad strategy. Systems need monitoring. Markets evolve. A system that worked 2 years ago might need adjusting today. You cannot set it and forget it forever. Technical failures happen. Bugs, broker outages, connectivity drops. Oversight matters. But here is the key difference. When something goes wrong with an automated system, you can diagnose it. You have data, you have logs. You can see exactly what happened and why. When something goes wrong with discretionary trading, it's inside your head. And that is a much harder problem to fix. So here's where I land on all of this. If you're brand new, spend a few weeks with discretionary trading, not to become a discretionary trader, but to understand what a trade actually is. Feel the emotions, learn how markets move, then move on. Don't stay there for years thinking you're developing some mystical skill. You're not. You're reinforcing patterns you can't measure. Once you understand the basics, build a system. Start simple. Backtest it properly. Deploy it. Monitor it. Refine it based on data, not feelings. Real trading skill isn't the ability to sit in front of a screen and guess. It's the ability to design, test, and improve a system that runs without you. Most retail traders follow the same path. Course, strategy, fund, lose, repeat. Using the same tools as the 90% who are failing, and wondering why the results are the same. The answer is not to study harder and do the same thing. The answer is to change the approach entirely. Automated trading is not the easy path. It requires real work up front. But it's the smarter path, because it removes the biggest variable that destroys most traders. That variable is you. Next video, we go practical. How to build a simple automated strategy from scratch. The rules, the backtesting, the deployment. No developer required. Make sure you're subscribed. See you there.